I'm going to reveal a powerful Fibonacci trading strategy that I learned many years ago. It combines the elements of structure analysis, price action, Fibonacci retracement and extension levels, and the candlestick analysis. And what I like about that trading strategy is that it is suitable for beginners. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let's start. Step number 1. Find a trading market. The market that is trading in a bullish or on a bearish trend on a daily time frame. Take a look at the price action on Aussie dollar on a daily time frame. Here the market is trading in a bullish trend. You can see that here we have a strong bullish impulse. Then the market retraced, set a higher low, and then bounced and set a new higher high. So from a price action perspective, we have a healthy bullish trend here. Step number 2, execute the structure analysis on a daily time frame. Identify the important vertical and horizontal structures, supports and resistances, and the trend lines. When you execute structure analysis, you simply should look for the zones, the areas, or the trend lines that were important for the market participants in the past. For example, here, that area, you can see that it was a strong resistance in the past, and after breakout, it turned into a strong support. Traders, learn my trading strategies in my premium group. Watch how I analyze and trade the market live. Watch how I execute my trading positions. For more info, check my website. It is vasilytrader.com/private group. The link in the description below. Then over here we have one more very significant support from where the strong bullish impulse initiated. And then we have a very strong support right here from where the market started to trade in a bullish trend. And our resistance here is that area. The area based on the current high from where we see a correction on the market. Step number 3, draw the Fibonacci retracement levels. Now you should draw the Fibonacci retracement levels. In order to do that, remember, in a bullish trend, you should first identify the current low, the point from where the market initiated a bullish trend, and the high, the highest high in the current trend. Then take a Fibonacci retracement tool and draw the retracement levels from the low, from the point from where the market started to trade in a bullish trend. And your completion point will be the highest high of the trend. And here are the Fibonacci levels that you should look for. You should look for 382, 50%, 618, and 786. This will be the most important ratios to watch. Step number 4, identify the confluence. Identify the Fibonacci retracement levels that lie within the key structures that you spotted. When you're looking for the confluence, simply identify the structure zones that you spotted and then look for the structure zones, the areas where the Fibonacci levels lie. For example, you can see that within that support we have 382 retracement and 786 retracement is lying on the upper boundary of that support. So this two structures will be on focus. And you can see that I removed all the Fibonacci retracement levels that do not match with the key structures that we spotted. We do that to keep our chart clean. Step number 5, let the price test one of the Fibonacci levels that is lying within a key structure that you spotted on a daily. You can see that after some time, the price finally tested the 382 retracement level. And that is the moment for you to start lower time frame analysis and to look for a confirmation. Step number 6, look for a confirmation on a 4-hour time frame. And our confirmation will be a formation of engulfing candle. Bullish engulfing candle will be a strong bullish candle that completely engulfs the range of the previous bearish candle with its body. And a bearish engulfing candle will be a strong bearish candle that completely engulfs the previous bullish candle with its body. You should look for a confirmation on a 4-hour time frame. Your confirmation will be a formation of a bullish engulfing candle. Take a look at that bullish candle. It is a perfect example of a bullish engulfing candle. If we analyze the body of that candle, if we underline the boundaries of the body of that bullish candle, we can note that with this candle, the market engulfed the entire range of that bearish candle. It indicates the presence of big players, the buyers who are buying big, and that is the perfect indication of the strengths of the buyers, and that will be your strongest confirmation. Step number 7, open a trading position, set stop loss, and choose the target. After you spotted a bullish engulfing candle, buy the market immediately after the candle closes. That will be your entry level, and the next step will be to set a safe stop loss. In order to identify the best level for stop loss, you should apply the Fibonacci extension. And you should apply the Fibonacci extension on a daily. You should identify the last bearish impulse, the movement from the high to the Fibonacci retracement level from where you are buying. That will be the impulse lag on focus. And then you should draw the Fibonacci extension. You should draw the extension from the high of that impulse to its low. And your safe stop loss level will be based on 1-72 extension. The last thing that we are looking for here is the take profit level. And your take profit level will be the structure based on a current high, the resistance based on a current high. And your target level will be simply its lower boundaries. So that is how your trade will look like here. And take a look how nicely the price bounced then and reached our take profit level. Take a look at Aussie Swiss pair. We can spot that on a daily time frame, the pair is trading in a strong bearish trend. And here's our structure analysis for Aussie Swiss on a daily. You can see that here we have multiple horizontal resistances and a horizontal support based on a current structure low. When you draw Fibonacci retracement in a bearish trend, make sure that you draw the retracement levels from the point from where the market started to trade in a bearish trend. And here will be your Fibonacci retracement levels: 382, 05, 618, and 786. Looking for a confluence, we can see that here we have just one confluence level, the 05 level. It matches with that horizontal resistance. We remove all other horizontal structures and the retracement levels where there's no confluence to keep our charts clean. Take a look how the price reacted to our confluence zone on a 4-hour time frame on Aussie Swiss. You can see that even though we violated that at some moment, then we quickly formed a bearish engulfing candle. You can see that this bearish candle was very strong, and with this bearish candle with its body, the market managed to engulf the body of a previous bullish candle. That is the perfect indicator of the strength of the sellers. It indicates that the selling volumes are very strong, and it is our strongest bearish confirmation here. Once a bearish engulfing candle closes, you should short the market immediately, and here would have been your perfect level to sell from. Your stop loss will be based on the Fibonacci extension of the last bullish impulse, on that bullish impulse on a daily. You take the Fibonacci extension tool, and from the low to the high of the impulse, you draw the Fibonacci extension, and your stop loss will be 1-72 extension. And your target level will be the structure support based on a current low, and your target level should be its upper boundary. And take a look how perfectly this trading setup played out. Being applied properly, that strategy will generate 60% win rate and higher. And here are some important tips for you to note. First, always check reward to risk ratio and make sure that it is positive and that your reward to risk ratio is at least 1.1. Also, before you place the trade, make sure that you trade with the trend. If the trend is bullish, make sure that you are buying, and if the trend is bearish, make sure that you are selling. That strategy works perfectly on Forex, gold, silver, oil, and indexes. Try the trading strategy, backtest that, and good luck in your trading. Let me know in the comment section if you have any questions. Also, if you want to learn how to trade, do not forget to check my premium educational group, the link in the description below. Also, traders, do not forget to watch my other videos.